Morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates, and then we're going to talk about the new conventional loan limits. We'll wait just a minute here to get started. Let us go live on all the different platforms. We put the chat up on the screen, so feel free to drop a comment there in the chat as you tune in. I see some already coming in there. Appreciate it. Everybody tuning in nice and early. We'll get started here in just a moment. All right, some comments coming in. We appreciate it. Got some new stuff going on here. Yesterday we talked about the new LTV limits, and today we're going to be talking about the actual loan limits. So, new stuff going on here in our industry. Thank you for the comments coming in, though. Appreciate it. All right, good stuff. Okay, so it looks like we're live on all the different platforms. We'll take the chat off the screen, but keep dropping comments there in the chat, and you can drop any questions you have in the chat as well when we go through our deep dive topic here today. All right, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do every morning on this show is go through the live mortgage rates, and then we do a deep dive into a different topic each day. Today's topic we're going to be talking about is the new conventional loan limits that were just released. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into that here in a moment. But before we do that, we'll do what we do every morning, which is pull up the live rates and see what they're looking like. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are doing this morning.
Sounds good. Let me change my screen. We'll check it out. Look like I saw some positive movement already today. So should be a good time to check this out. All right, so this is our pricing tool, as Kyle mentioned. This is for our team of mortgage professionals. This will show us the general rates and the APR for today. It is November 29th, just after 11 a.m. Eastern, so all the general programs are live here. So we'll set up a basic scenario and compare across the programs. If you'd like a full breakdown, a full itemized loan estimate, please get with our team members. We have over 400 licensed loan officers in 24 states. So for today's demo, we'll use a loan amount of $400,000 to compare the programs. We'll set the LTV to 80% loan, 20% down payment. We will ask the computer to search for the absolute lowest rates we can offer at the moment for our conforming conventional programs, compare that to our FHA programs, and then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs using alternative income. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. And USDA is only for eligible properties. If you do happen to be looking at one of those eligible properties, just let us know. So we'll start with conforming conventional. We'll do purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio here of 40%. So with these settings, as we do every morning, let's check out our basic scenario. All right, and it does look positive. Definitely gone down a touch from yesterday, which is what we love to see. So today, best action we have here, 6.625 rate, 2.25 discount points in costs, but the final APR 6.903. So yesterday we were a touch over 7, today we're under 7, which is amazing. Remember, just a few weeks ago, we were approaching 8 on the APR here. So very welcome changes. All the customers out there shopping, looks like a great time to lock in those rates. Now, if for any reason our customers do not qualify for a conventional conforming program, typically the next option we want to pull up to compare is an FHA program. So we'll set up the same exact scenario, and this time we'll select FHA. FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio, but we'll set everything exactly the same here so we can compare apples to apples across the programs. So let's check out the FHA options this morning. Wow, been a long time since we've seen a 5 in front of the rate, right? So again, downward momentum, we love to see that. 5.875 rate, 2.5 discount points in cost, puts the final APR at 6.829, Remember, the APR here for FHA includes the upfront and yearly mortgage insurance. So this is definitely a great option for our borrowers that need to use it and our borrowers that qualify for both conventional and FHA. This is actually just a touch cheaper. Not much today, but typically FHA will be just a touch cheaper for our customer that may qualify for both. So definitely don't overlook those options. And now if our customer for any reason doesn't qualify for any sort of conventional or FHA program, unfortunately many other banks or lenders have to deny that customer, but that's where we love to present our expanded guideline options where we have over 5,000 additional programs most banks or lenders don't have. So if we select expanded guidelines here, that everything else will stay the same, but now it allows us to select a new option for income. So full doc is what we use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So we'll typically choose a non-QM program to take advantage of one of these alternatives. We've done episodes on most of these, asset-related programs, business bank statement programs. The investor programs are just for investment property, so those don't apply here. Personal bank statement 12-month is what we use here for the demo. That's the most popular. We have RSU, stated VOE, 1099, P&L, and no income CDFI. Check some of our past episodes for deep dives into those topics here. So we will do our 12-month personal bank statement, which is our most popular program for our self-employed borrowers. Many times our self-employed borrowers have various write-offs and may not qualify using their 2 years of tax returns. So we will solve that problem. No tax returns involved at all. Simply use their last 12 bank statements to determine a debt-to-income ratio of 40% in our example here, using just their cash in the bank. Many times our self-employed borrowers qualify for double or more income using this method and can therefore get that home they really want. So let's see the bank statement options today. All right, I think it's a touch lower than yesterday, but the non-QM doesn't react as drastically. So we should see some updates to non-QM as long as the markets continue downward, possibly tomorrow or the next day. They usually update either once a week or a couple times per week here. Best option, 7.625 rate, 2.25 discount points and costs, final APR 8.039. And again, we should see some options going down here in the next couple days, as long as the conventional keeps going down as well. Now, if we scroll down, there's tons of different options here, some at higher rates and costs, may allow bankruptcies, foreclosures, other issues. So please get with our team. They can find which one of these dozens, if not hundreds of different variations, work best for your scenario. And before we get into the new conventional items, we always want to go over some live pricing for investments. So if we select investment property as the occupancy here, we'll set up the same scenario, 80% loan to value, 20% down payment. We will ask the computer to find the lowest rates we can offer at the moment for the programs, and we will compare our conforming conventional programs for investments to expanded guidelines, non-QM programs. Remember, government programs, FHA, VA, USDA do not work for investments. So we'll do conforming. Everything's going to stay the same as all our other demos. And the only thing we've edited here is the occupancy to investment. So we can see the adjustments conventional has here for an investment property. And it's gone down pretty significantly as well. So some great options here, 7.125 rate, 3.5 discount points and costs, puts a final APR at 7.549. So remember, conventional investments were up well over 8 for a long while there, and were actually very hard to actually do. So now we have some great options for our borrowers that are looking to do those conventional options for investment properties. Definitely has eased up. Great news there. If we scroll down here, let's see. Yeah, look at our portfolio program we always keep an eyeball on. Remember, this was beating conventional by a long shot for some time. Is now in, it looks like about 12th place, maybe more 15th place. So remember, this doesn't change much daily, whereas the conventional does. This was beating conventional for quite a while there, but now since it hasn't changed, conventional is beating it. But always keep an eyeball on this. It's a great option for those customers who may need a little bit of flexibility there. And for the final demo, we'll do investment property again, 80 LTV again. And this time we will select expanded guidelines, also known as non-QM. So everything else will stay the same, but now we have our income pop up. which our most popular income type for an investment property is going to be the DSCR option because it doesn't actually require any employment or income or documentation from our borrower. It simply uses the estimated rents to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. Even if the property doesn't quite cash flow monthly, and that's a ratio under 1, we still have options for that. For the demo, we always put 1.5. That's the highest the computer accepts, so we can see all the program options pop up. And finally, prepayment penalty must be selected. 3 years is standard for these programs. We can select 0. That will limit what shows up and cost much more. We can also select 5 years if our customer wants to keep the property, but that does limit what shows up. It does save a little bit of money if our customer wants it. 3 years is standard. That's what we'll use here. So we can see the most options pop up. So let's check the DSCR rates today. Gone down a touch, but again, these might adjust more later. Non-QM typically adjusts later. Best option today is 7.625, 3.375 discount points and cost. But the final APR at 8.164. So remember, conventional was at like 7.5, and we have a DSCR option at 8.1. So about 0.6 difference there. I'd say 95% of investors would still take a DSCR loan over a conventional loan when the price is that close. We were actually beating conventional for a few weeks there. Now it's more stabilized. But even when the pricing is 0.6 difference, as it is today, I'd say most investors usually lean towards the DSCR options for the flexibility, 1, 2, 5, 10 loans at a time, refinance multiple properties, no employment, no income, lots of flexibility. And if we scroll down here, some of these options at higher rates and costs may allow bankruptcies, foreclosures, other credit issues, and may allow us to use different methods to calculate the income, such as the super popular short-term rental options. So tons of options here. Please get with our team. They will find the best ones. All right, let me switch my screen so we can get into the exciting news here with the new conventional loan limits. So on our demo every day, I choose a 400,000 loan amount, nice easy loan amount. Hopefully that's not too low for a lot of neighborhoods and not too high for a lot of neighborhoods. That's a nice easy amount. However, there are upper limits to all the programs, and conventional is definitely one that we always monitor those limits. We always want to typically go to a conventional loan first as the most beneficial to the borrower. So always being aware of these loan limits is something our loan officers and our team should always be aware, and the public should also be aware that they just released the new loan limits for 2024, which they've been allowing us to do for a few months here, getting ready, but now it's officially out. We have the official final numbers, which also means that I believe tomorrow's episode we can go over the FHA numbers as well, which are a percentage of the FHA's numbers that were just released yesterday. So Jose, if you're ready, let's, I think you have a slide there with the actual limits pulled up. So let's check that out. And then let's get into some options if you're ready. Oh no, did he get frozen right at the last?
I just saw him frozen.
I just saw him moving.
Oh no. Jose. Okay, Adam in the chat said, wow, haven't seen 5 for a very long time. Absolutely. That made my day today.
I can pull up the loan limit part, I guess, while Jose gets back here. So let me, hold on, let me switch my screen real quick and I'll do his little intro part here. Because I do have that page pulled up. I was just looking at it. All right. And I'll put this in the chat actually as well in the comments. So here we go. New loan limits. Let me put this in the YouTube chat. And I'll put this in the Facebook chat in case anybody's watching there as well. But this is the page for Fannie Mae. See, we're here on fanniemae.com. This is their loan limits. And these are the brand new values for 2024. So these are applicable even if originated prior to the first of the year, which is technically when they're applied for. So here are our baseline loan amounts for 2024. So our base 1 unit is going to be 766,550 this year. So we were estimating about 760. We were allowed to go up to about 760 up until today, now all of our programs will officially go to this exact limit. So please update your borrowers if they're right there on the edge. And we can go ahead and now approve them for a conventional loan there. And remember, the high cost areas have a limit. Obviously, check your exact area. There's a ton of different areas in between, but these are the designated high cost areas where the entire area is high cost, which is 1.149. A lot of California and other states like that also apply to these upper limits, but you do have to search those here on the website. So, Jose, I know you're back, but I'm doing this part for you, but you can unmute if you want to talk about it. These are the baseline amounts. Remember, every property is different. These are the baselines, right? So if you're in a state that's not necessarily Alaska, but does have a high cost area, you do want to check your limits there. Now, 2 units here, 981,500. 3 units, 1.186 million, and 4 units, 1.4 million. Wow. And here in the high cost area is 2.2 million. So these limits are really bumping up on these multi-families, which is amazing because a lot of these properties are approaching those types of values. Jose, you want to touch on any of this before I switch back to you? Your screen?
Give me a second here because I'm pulling up the quotes and putting them back. I had to like restart everything. So sorry.
Yeah. So you see here, this is the base for the high cost areas, and then it says this is the max. So as I mentioned, the high cost areas like California will be between these two because this is the actual max, right? So these are the absolute maxes depending on the area. You have to look up your area in the geocoder here. They do have a tool here on this thing here. So if you click this button, you can go to their lookup tool. It's probably not going to run very good because it's a pretty heavy tool there. But if you are looking at a specific property, especially for the area median income, for those special Refi Now, Home Ready, all those other specialty programs, make sure you check that. And this will also show the exact loan limits. So let me switch my screen again. Jose, you got to share your screen, I guess, if you're ready. But let me
Give me another second.
take this off. Put our topic back for today. So when Jose pulled his screen up, he's going to have some quotes for us at the upper end of these limits, right? So before we were kind of guesstimating around 760, which was a general guesstimate. Now we have the exact value. So Jose is going to have a couple examples here of taking it to those limits. So you ready?
Pulling up the last one here a second, and then I will share my screen. All right, I am ready here.
That's your first quote? All right, cool.
So you already showed the chart, so I don't
Yes,
have to
sir.
get into that. So I'm going to share here now. I will state that the pricing engine is still working on the high balance settings. So they don't have all the high balance settings at the new loan limits, only for the 1 unit, where we probably jumped the gun on them because I think today's day 1. So, but let's go first with our new regular quote unquote limits, right? So we've gone up over 40 grand. So our 1 unit in non-high cost areas, the new limit is 766,550, right? Which is pretty good. So here I went ahead and did all of these at a 95% LTV, and due to the fact that we have our new 2 to 4 unit limits as well for primary, that's going to be pretty interesting here. So here we're looking at 7.499 with a little bit of a lender credit. And then you're looking at, which is our lowest cost option, and then you can buy that down to 6.5%. And I do add here, I always like to remind everyone out there listening that we're showing the rates that we feel will not have any issues running a points and fees compliance test. Keep in mind when you're doing your final tweaking of your file, you're going to be running a compliance test, and you may get bona fide discount points. So it could be possible that when you're finally doing the final setup of your file, you would be able to offer a buy down rate lower than this. And also, if the seller, if this is a purchase and the seller is paying um, seller credit, giving some seller credit to the buyer for their closing costs, you can apply that seller credit directly to loan discount. And those would be seller paid as opposed to borrower paid fees. And then those would not get counted in your points and fees portion of the compliance test. So you could buy, the borrower could buy the rate down lower in those scenarios. This is just the initial setup when we're doing the quotes. So those are all things you can explain to the borrower. Now for our 2 unit, and this is at our new regular area limit, 981,500 for a 2 unit property. So you're looking at 7.624 is our par rate, and you can buy that down to 6.75%. All right, 3 unit. Our new 3 unit limit is $1,186,350. So again, here, no loan level price adjustment going to a 3 unit from a 2 unit. So 7.624 is our par rate, and you can buy that down to 6.75%. And these are all, remember, 95% LTV, which is very cool. So our 4 unit option here at our new $1,474,400 limit, and we don't have any rates there, darn. But I will tell you, it's the same rate as this one. And then I was able to get one to pull up. They have not programmed the 2 to 4 units yet for the high balance areas. So I have for you the 1 unit at the new limit of $1,149,825. Now, keep in mind that's the high cost for high cost areas. However, if you remember that list, I believe it was Alaska, Hawaii, U.S. Virgin Islands, and Guam. These would be the regular cost limits. They're not going to be labeled high balance, because when it is high balance, there is an additional loan level price adjustment. Because if you want to compare here, for example, you're looking at 8.124 costing 0.375 on a 1 unit, right? And if we come over here, you're looking at 7.125 costing you approximately a quarter. Let's see if this one's any different. And so here we would have 7.499 costing the same 0.375. So looks like it's around anywhere from 0.75% to 1% difference in pricing when you're dealing with a high balance county compared to a non-high balance county. So you have 8.125 lowest cost option, and you can buy that down to 6.75. So keep an eye out as they do update the pricing engine, so you can obtain your 2 to 4 unit high balance quotes as well.
All right. I do not see any questions in the chat. Also, Nick put the link in the chat there to the loan limits as well. If you want to go check that out, bookmark it, make sure you have it there handy. But it looks like we can go ahead and wrap it up. So were you going to say something, Nick?
And the link to the geocoders on there too. So remember, the general lists, but if you want to actually look for your actual county, like Jose said, make sure you actually type in the address there.
Absolutely. It's county based, so be careful. All right. So thank you everybody for tuning in. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then we do a deep dive into a different loan topic. So we'll be back here tomorrow with a new topic to get into. Thank you everybody for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.